Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining me for this segment, we have Jon Maier, Chief Investment Officer at Global X, to discuss the market narrative that is hyper-focused on higher yields and the yield curve, of course. Jon, it's great to see you as always. Welcome back to Trade Talks.
Great seeing you. Thanks for having me.
You got it. Jon, you and I have discussed before for 2023, we're certainly see the market climb this wall of worry, but it seems to be the narrative has shifted a bit here where it's really taking notice with yields, really taking notice with earnings, and it's essentially pricing in, there is risk in the market and every little data point is going to matter.
Yeah, I think that's a fair assessment. The GDP numbers came out today and they were very strong. And what they're saying is the consumer is still spending. But going forward, the consumer is not going to be spending as much. From our perspective, by all indications, businesses seem to be slowing down on their spending as well. But the Fed's been pretty clear that they're going to stay higher for longer. And the market is very sensitive to that. And over the past 2 trading days, particularly yesterday and going into today, we saw some earnings like Google highly focused on what's going on within those companies. Overall, good numbers, but the cloud service numbers were weaker than expected, showing there's winners and losers in the AI space. And what we are seeing is the market really differentiating now versus the first half of the year when the Magnificent Seven just drove the market much higher.
Well, I wonder if market participants are more discerning in terms of the earnings results that they are getting, right? I mean, Google Cloud, I believe, is only 20% of the business relative to the other 80%. So I just feel like investors are looking for perfection because they know that there is heightened risk in the market here. Why do you think the narrative has shifted to long-term yields and the yield curve?
I mean, my assessment is that the market is coming to the realization that a greater risk premium is necessary for the long end of the curve. And it's now beginning to factor that into this heightened risk. And that goes into business models, higher cost of capital, higher for longer, lower earnings in the future. So the market's saying, we're not expecting a rate cut any time in the near future. So let's really look at these individual companies and who are going to be the real beneficiaries of, say, AI, which has been the big story of this year. There is heightened sensitivity to different aspects of the business that they feel that the market feels that that's where growth is going to occur. Microsoft certainly is appearing to be the short-term winner in the AI space right now.
Jon, do you think that AI is going to be as influential in 2024 as it was for 2023?
AI is with us. AI is important. The big question is, how is it important and how are investors going to realize returns from it? There's 2 parts of the AI market from my perspective. One is that AI, the companies that produce the user interfaces, the companies that produce the GPUs necessary for generative AI. Then there's the other side. Who's going to be the beneficiary of AI? Where is the efficiency going to be realized? And we're just in the early stages of that. And I think the market really is vetting that out right now.
All right. And finally, let's end on a positive note. You noted that PMI remains robust.
Yeah, it does remain robust, and it's reflecting an acceleration in manufacturing. Consumer confidence remains strong, and the corporate sector continues to display good health. And that's positive. And the consumer balance sheet is still pretty strong.
All right, Jon, appreciate the insight as always. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.